So it's been a few weeks since we've done any form of video analysis. For that, I apologise. So let's just get stuck back into it, exactly where we left off with Euro USD. The analysis has not changed that much. You guys know that for absolutely weeks now, we've been referring to these two main levels, the 1099 and the 1107 levels. So the 1099 is very much still our main support, and the 1107 is still very much our main resistance. Now, last week I was expecting some bullish moves on this pair. Obviously, we didn't get involved in a trade on this pair, and as you can see, we've just had plenty of ranging still in between our main support and our main resistance levels. So there wasn't enough movement to warrant taking any trades on this. There was no sort of daily closes above or beneath that were warranting me to take a position on this trade. My bias on this pair has now changed. So I've gone from believing that we are going to see a bullish breakout to now thinking that we're going to see a bearish breakout. And my bias has changed purely because, as we can see, we're in this newly forming channel here. That's our top line, and this is our bottom trend line of this newly forming channel. And we've actually, on Friday and Thursday as well, but on Friday we physically smashed through this trend line, closed beneath. We've given a tap to our what we know is a key level in this pair of our main support, and we have then climbed back up and retraced to the underside of the trend line. So to me, that changes my bias immediately to believe that we're looking at the bears showing up this week. Now, I personally will not be taking any trades on this pair until we can get a daily close beneath the 1099 level of support. The reason for that is this analysis is actually slightly contradictory to some of the analysis that I'm going to be showing in a moment. For example, Euro JPY. I am still long on Euro JPY, so I'm a bit reluctant to be shorting Euro USD because that obviously conflicts. Now, what would get me interested to be able to open up a trade on this pair would be if we can catch a daily close beneath this main support level of 1099. I feel that can potentially open up the gap to 1088. Being a target. Now, it's obviously going to make sense for us to have a halfway house. We can see we've got a crossover period here where we've got multiple taps, so we've got a confluence to believe that there is also a level of interest just here. So it's probably going to make sense to have a conservative TP if we do in fact break beneath the 1099. As I say, I will not be trading this range here in between these two. I'm not interested in doing that. It could break either way. And with NFP next week as well, I'll be surprised if we see any major moves made early in the week, but let's see what happens early on. Monday, Tuesday, if we can get a close beneath, there's a good chance that I will in fact short this next week. So as we've just said with Euro USD, slightly conflicting, but I quite like this analysis. I'm relatively confident in this trade, hence why I've got quite a few positions on it that have been opened up at nice areas. As most of you know, I think I've probably got quite ambitious hopes for this pair, but it is based on some top-down analysis in the higher time frames. So I actually got into the trade at 1197, so we're just about here. Last week on, what would it have been, Tuesday or Wednesday, I managed to get into a trade. Was quite happy that I was entering at the middle of the flag because I was quite happy with the structure of the flag in itself, so I wasn't even too bothered if we came back down and saw a bit of a tap. Now, my ultimate target for this pair is 123. Maybe slightly ambitious. I think we can see we've got a few other areas that we're starting to have to look at and notice on this pair. But it's, as I've already said, the trade is broken up into multiple positions, so they're all running well. All bar, I think, 2 positions are running risk free on this trade anyway. I think that next week we're looking to see a slight retrace back down. If we move into a slightly closer time frame and jump into the 4-hour and just zoom in a little bit, we can see that we have clearly broken out of the flag. We're starting to see quite a considerable amount of bearish pressure forming. We've got quite a lot of upper wicks, so we're starting to see that the possibility of a retrace is looking quite likely. Now, for me, my ideal retrace is going to be around the 120 mark. If we can get a retrace and a perfect tap to the top of this flag, then I will add to this position. And I will carry out more longs on this trade. However, we've definitely got a level we can see here, a level of support where we are starting to get multiple taps. So I think it's very possible that we will actually get a retrace around the 123 mark, 120.3 mark, and in which case I will obviously add. I personally wouldn't recommend anyone getting into this trade that isn't already in at this level, and the reason being is if we jump back into the day view, now it doesn't look like a very big gap to take a dive from here to the top of the trend line, given the fact that I believe we're going to get a climb. Where I am at the moment, if I am wrong and we do see a break back into the pattern, I'll be closing out at break even. As where anyone that's taking this trade now, I mean, if you get a tap on the top of the trend line, you're going to be fine, and that's not a problem. But there's a big if there. If you do not get a tap on the top of that trend line and a rejection, and we do fall back into the pattern, that is a massive cause for concern for anyone that's opening around this 120.6 mark. So if you're not in the trade, I would wait until bare minimum would be 120.3 and then consider maybe adding small. And if you want to play it really, if you want to play it more safe, then I'd be looking at waiting until we get to the 120 and look for a tap on the top of our trend line. This is, it's textbook stuff. We've got a flag that has broken. We have closed multiple days, have closed outside of this flag. I mean, it's not the cleanest flag in the world, but it is still definitely a flag. And then we're looking for a retrace. So 90% of the time, the price will retrace. And I believe that that is what we are looking at here before this pair starts making its way upward. I'm probably looking to hold this trade for about 2 to 3 weeks. I've already held it nearly for a week, and it's sat in a nice position for me. But now I just hope that we can get a retrace, a decent retrace at least, to be able to add some more to it. Because as I say, I am happy with this analysis. It's top down, it's higher time frame. The higher time frames are generally more reliable than the smaller time frames or than the lower time frames. Moving on to UJ, or US dollar Japanese yen. We obviously, we've been looking at this pair, and Tao even more so has been looking at this pair for a number of weeks now. We can see that we've had the 3 rising valleys, and we've also got a lovely rising wedge forming. It's not the cleanest pattern. I apologise for the fact that there's so many areas in comparison to how I'd normally mark out a pattern of this nature. However, the price action has been so choppy. I feel that there's quite a few levels for us to be monitoring here. We can see that we've had breakouts of patterns only to smash back through. We can see that we've got strong levels of support and resistance only to have been crashed back through and then broken again. So I feel that I've kind of had to map out these areas just to enable us to be able to see that there's actually more than one level of interest on here. Now, it's very possible that early next week we will see a break of the 109.3 support, which is where we're currently at. We can see this level here is a key level within the pair. It's very possible that we'll break through this early next week. If that is the case, I am more than happy to miss the trade because I see there being room above head. My area of interest is the 109.9 area. I personally will be waiting for a tap on that level, and as I have just said, if we do not see the pair reach the 1099 level, then I will simply just miss the trade. The reason I'm so happy to wait is because we can clearly see that the 1099 area is also a key level. We've got plenty of rejection around this level through previous data. Not only that, we're actually looking at a confluence because we've got a descending trend line just here, and the trend line perfectly meets with our upper resistance. So that gives me two reasons to believe that this is our key area that we want to wait out for. Now it gets even more interesting because obviously next Friday is NFP day. NFP week alone can give some serious slow moving traffic purely because pairs are just reluctant to make moves, especially dollar pairs or gold. They're just reluctant to make moves before we see the figures of NFP released. So my eyes will be firmly planted around this pair for the early part of next week. I wouldn't mind betting we see some sideways range in action, followed by a slight climb towards the end of the week. If we get that slight climb towards the end of the week, I'll be monitoring price action heavily before NFP figures are released, because it's possible that we will see not a lot of movement, as I say, until NFP physically appears, and at which point we may well see our crash. Obviously, this is Forex. There's no guarantee of any of that, but we need to watch this pair. I'm convinced is going to come down. That rising wedge pattern it's got quite a considerable angle to it, and it's gone on for quite a considerable amount of time. The areas, they date back. Again, in previous data, we can see taps on these levels. So I'm quite happy to either miss this trade altogether or wait until we get our key level and then short this pair. So Canadian dollar, Swiss franc or CAD. Last week we traded the break of this rising wedge pattern. So we got in here and luckily we closed around the trend line just before we saw a complete retrace up to our upper support level. So again, this was another confluence trade. We looked at the top of the pattern mixed with this descending trend line that we were happy was around this level. Now, what we're seeing here is giving us even more reason to believe that this pair is going to be going short this week. If we focus our eyes here and here, that is the start of what I believe to be a very nice double top. Now, these patterns are never confirmed until the neckline is broken. So I believe that we are looking at a break of this support area, followed by a retrace, followed by a break of the neckline. This blue ray line is our current neckline. I will not be entering this trade until we see a break of the neckline, followed by a retrace to around the 751 area. If we can get a break of this neckline followed by a retrace, I will for sure be short in this pair. Again, the angle of this pattern says to me that it's going to come down, and it's going to come down heavy. We've been trading this pair for a few weeks now. We traded what we believe to be this head and shoulders, just sat here, left shoulder, head, right shoulder. We didn't get quite as much of a crash out of it as we wanted, but we did still take a nice profit on the trade. But I still believe we are looking at the rising wedge. We've got the descending trend line, and we've also got what appears to be, but is not guaranteed, a double top. So as I say, the key thing for this trade is going to be breaking this neckline and retracing back to it, at which point I will short.